Ladies and gentlemen, have you decided what you want from trading yet? Morning all. Good to see you all again. Well, it's evening for some of you. And welcome back to Rob's live show. Today I'm actually going to talk to you about how to take a trade when everybody's on board, when everybody arrives, and when everyone gets here. We'll start talking about how to take a trade. But before we get to that, let's talk about the news, the politics, what's going on in the world, what's happening, what's affecting the trading. Some of it's actually quite surprising. If I go to the other account, I'm just going to go down here to the other live capture because this is the one that caught me out the biggest, and that was this United States dollar, South African rand. I think I've spoken to you guys about this already. This one I would have expected, based on what's happening in the world at the moment and what's going down, to have gone up. Because the rand should actually weaken based on the news that's going on in the world. You know, where the US is talking about people from BRICS should get tariffed more, and that's South Africa. They're in BRICS, and they're going to get an extra 10% on in general, and he wants them to be tariffed 100%. And tariffs are coming back in tomorrow, guys. Tomorrow it's all back. It's all the news is back. The waiting period is over. They kicked the can down the road, and can they kick the can down the road any further? Not sure. But this one surprised me quite a lot because I really took this trade not based on the charts. I took this trade based on the fundamentals of the world, the fundamentals of what's happening around the world. And it surprised me. It went the other way. But it has now turned around, broken up, and now technically it has gone in my favor to the upside, and it's going in that direction. It has pulled back a little bit today, but now it is going in the right direction. So the technicals are starting to show me that it can go the right way. The other one that's held me up a little bit on this account at the moment is the gold. The gold, I took a long trade on the gold, a nice long trade here, and it fell back. But it's going back to where it was, but now it's falling back again. So caution advised here, if you are also long on this trade with me, is this seems to be going into a bit of a new bearish line here, but it might just be a pennant. It might just be a bit of a pennant where it's going to break to the upside. Anyway, but let's see what's going to happen there. But anyway, morning Tywell, morning Shane, morning Bruman, morning Peter, and Comfort, and Peter again. Should is a dangerous world. A dangerous word, should. I've actually got another saying for that, Peter, and my saying is, assumption is the mother of all evil and stupidity. You know, people always assume things, and that's where we make our mistake. Human beings do that all the time. We always assume something, and it's probably because we saw something happen in the past, or we saw something in deep embedded in our memory. We saw something, and it sort of makes sense to us, so we assume that's going to happen again without even knowing it. You might not even consciously remember that thing happening, but it's there. And you assume something based on that because somebody else did it, something else did it, or you saw that picture before. That's basically what we base our trading on at the end of the day. And assumptions are the mother of all evil. They will eventually hurt you. They will eventually get you into trouble or cost you money or something equally ridiculous. Now, I took a sell on the Euro Great British Pound because it was in this resistance area, and it's trying to prove me wrong, but we are still in profit here. So I'm holding on to that one with a view to it continuing on down because it's in a range. If I remember correctly, it should still be in that range. So it's sitting in this range here. So I'm expecting that if it goes the full the full distance of the range, then maybe we'll get something out of that one. But I am today going to go into detail on the best way to take a trade, how to take a trade, and so on. But the you guys account, the account for the A team, I just want to switch that on again. Okay, the A team account. We've only got the one trade sitting on there at the moment, which is the Brent crude oil. You know, I love the Brent crude oil, and that one is sitting in profit at the moment, but it really isn't doing much, and it really isn't going anywhere. I think I will probably look for another trade on this account for you guys and start adding something to it. But yeah, Brent is going above that 50% on the FIB. I don't normally trade with indicators, but I used the fib on the Brent because it just wasn't going anywhere. I wanted to see if it was going to go somewhere. And I do know how to use indicators. I've used lots of them. I can actually make loads and loads of videos for you guys about different indicators. But I don't want to teach you guys to trade with indicators because that's just going to defeat the whole purpose, isn't it? It's just going to take you backwards. I would like you to understand how all the different indicators work if you're new to trading. If you're not a seasoned trader and you don't know how all those indicators work, there's nothing wrong with knowing how they work because it's good for you to understand how someone else is trading when you're trading, and it's good for you to understand the market. It's not going to make you money. It's just going to give you a better understanding of the business that you're in. That's all. As I've said before, charts do not have any predictive capability. They cannot tell you what's going to happen next. All they can do is help you to take a high probability trade, or they can help you to see what's happened in the past and might happen in the future, or they can help you to manage your risk and manage your business plan. That's all the charts can actually do for you at any time, at any place, at any situation. So don't think that the charts can somehow predict the future simply because they have, like, for example, this DAX has gone into its trend again and it's bouncing off the support and it's going up. There's no guarantee whatsoever on this earth that that's going to play out. The only thing you've got is, oh, I've got a green candle going up and it's bullish, it's above the line. So in all probability, what happens usually is it goes that direction. And then you take the trade based on that. But if you understand that it's 50-50, that it could go the other way, then you can manage the risk and you can manage the trade. It's not rocket science, guys. The trading the charts is the easy part. The difficult part is being able to manage that properly. It's coffee with Rob, so we're having coffee. Hello, Alan. Good morning. I see you there. And yeah, my help is effectively just, it helps me as well, guys. You know, you must remember that I'm doing this in the sense that it keeps my mind focused. It keeps me awake. It keeps me going, because if I just sit here and trade by myself, it becomes insanely lonely, number one. And you do make mistakes and you start to do things, silly things. So what I do by doing these videos and speaking to you guys, number one, it keeps me busy. Gives me something to do because trading is boring. And number two, keeps my mind focused, keeps me fresh. You know how many times when I've made these videos in the last year and a half or two for you guys, I've come across something and thought, phew, I forgot about that, you know, and it refreshes your memory and you go, yeah, you know, I should really keep that in focus. So it's good for you. It's really good for me. So at the end of the day, you know, I do get a little bit back from it in that sense as well. It helps me, and I also like having company sometimes as well. So yeah, it keeps you refreshed, it keeps your mind on the game, and it keeps you thinking, keeps you going, keeps you busy as well. Because yeah, you get bored, you make mistakes. You know what happens when you get bored as well, particularly if you're trading on the 4-hour charts like we do. This is the big thing. You're trading on the 4-hour charts and you think, well, I can do things. But then if it's raining and it's cold and there's really nothing to do and you're just sitting around and you're looking at the charts, you know what you're going to do? You're going to be enticed to drop down to the 5-minute charts, the 1-minute charts, the 15-second charts, because you want to do something. You want to keep busy. So you start trading on lower time frames and you start playing around with fire, and eventually it kicks you back. The thing is, overconfidence is another big problem in the markets. You know, I always talk to you guys about the fear. I always talk to you guys about the fear of missing out. I talk to you about patience and sitting on your hands. But overconfidence is another big issue, really big issue. You know, if you're one of those traders that goes and trades on the 5-minute charts, for example, it's easy to suddenly have a run of wins. So you have a run of wins and you're really confident that this is working for you because for some other unknown phenomenal reason, you've stumbled across the right choice of trades. And it's gone in your favor, and it's gone in your favor maybe 7, 8 times. And that overconfidence steps in. Maybe you win for a few months in a row. Maybe you just really do well and you make a lot of money. And that's when it gets dangerous. It becomes insanely dangerous. You'll start taking ridiculous trades. You'll start increasing that risk to the extreme because you just believe you're infallible. Nothing can touch you. And that's when it goes pear-shaped and it goes against you. And when it goes against you in a situation like that, it's actually far more painful than if it just goes against you under normal circumstances. The reason I'm telling you this is because I've been through this. Believe me, I've done this before. My overconfidence stepped in. I thought I was infallible, and I got taught a lesson, a big lesson. And you learn from those lessons. We call it school fees or paying tax. You learn from those lessons because then you realize, hang on a minute, I've had a good run, but what's gone wrong? And when it goes wrong, you just cannot understand why it's going wrong. It's impossible for it to go wrong. How could it go wrong if you've been winning for 6 months straight? And how can anything go wrong? It doesn't make sense to you. Our brains are not wired for that. When something like that happens, our brains kind of stop working. They don't understand why it's happening. And it takes a lot for you to refocus and sit back and think, oh, perhaps this is the case. So be careful of that overconfidence stepping in and taking you out. It can hurt a lot. 10S charts are the best. Tom uses 10-minute charts. Actually, Shane, you can use any time frame you want. You can use the 10-second, the 10-minute, the 4-hour, the 1 day. It doesn't matter. What you have to understand, though, is whatever you're trading on, the strategy remains the same. And as long as you control the strategy correctly, then you'll be okay. Because that's what we're going to talk about today. We're going to talk about how you take a trade and why you take a trade and what a trade's all about. Now, John, you talk about Tom. Tom is an experienced, a high-stakes trader, and he's got a certain kind of mentality, and to copy him is not going to be easy. Okay, he puts a lot of work into what he does. He works out how those systems work, and it changes. He understands that the market is alive, and his systems don't remain the same forever. He changes things or changes up as the market changes. So those things that he doesn't always trade on the 10 minutes. Sometimes he trades on the 5 minutes, sometimes the 15 minute. I have seen him in the past, and I appreciate that he's probably one of the best high stakes traders around. But you have to understand that you can't just copy someone else's trading. I see a lot of these guys out there saying, this is how much you can make. Look at how much I made. Look at this. I always make money. Blah, blah, blah. I'm not talking about Tom. I'm talking about other traders. And what I'm saying is what they do is they show you all these profits, okay? And they try and make you believe that if you just follow them, that you'll get the same result. But you won't get the same result because you have a different brain. You have a different psychology. So what you have to do is teach yourself that psychology that person is using, and then follow that strategy, and you'll notice that he follows a very similar strategy, just slightly tweaked to his preference because it's his preference, but he'll follow a similar strategy. He's not just looking at the lines, he's following a strategy of wins and losses, making more on his wins, losing less on his losses. And it's just that, and how what stakes can you handle? How high can you go? Then you also have to understand that, that the type of information that you're getting on those lower time frames is also a totally different ballgame. It only counts for that very short period. So the information is not as reliable as the information on the higher time frames. So it depends how you want to trade, but you always have to understand that no matter what time frame you are trading on or what you decide to trade on, you have to have a plan. You have to have a strategy that is not the charts, that is separate from the charts. What kind of strategy are you going to employ? And it might be something as simple as, let's say you've got the strategy of stop loss, you've got that taped. you still need to have a strategy. Are you going to trade all day on those 5-minute charts or 10-minute charts? Or are you going to trade for 10 minutes? Are you going to trade for 2 hours? Are you only going to trade at the opening of markets or the closing of markets? What part of the day are you going to trade? And if you take a loss, what are you going to do? Most of you will take a loss because all of you believe you're going to be in the top 1%, but you're not. It's always difficult. It's always difficult, but you know, people want to follow other traders, and what I'm trying to do is really just show you how to trade and the best way to go about it. And then you just need to tweak it for yourself and work out a system that works for you. You can never trade exactly the same way as somebody else because at the end of the day, it's not about the lines. It's about how you apply your strategy, how you apply your business plan. And that you're going to do in your own time. That you're going to do when you're worried about how much money you're losing or winning. That's when you're going to apply those strategies. You're not going to apply those strategies while you're watching me trade or watching Tom trade or watching anyone else trade. It's everyone's got their own way of handling the market or handling loss or handling wins. Some of you will be able to add to your wins, others not. Some of you will be able to let the stop losses run out, others not. Others will want to move the stop loss or dollar cost average. I've had people say to me, there's nothing wrong with dollar cost averaging. And then I fall off the back of my chair laughing, thinking, well, one day you'll see. Hello, Sir Lancelot. It's good to see you again. And Sir Lancelot back on the 15-minute and love it. Okay, and there's nothing wrong with that if you want to trade on those higher time frames that are going to keep you going. But then, like Bruman says, weekly are the safest. So now you've got to look at, do you want to throw caution to the wind, or do you want to trade relaxed and cautious, or whatever the situation? Now you'll find most older traders and more successful traders have moved to the higher time frames and the 4-hour time frames and the daily time frames, because it's just, we understand that you cannot time the market, and the only way to really make money in the market over a long period of time is to have time in the market. And unless you are extremely lucky and insanely good at picking the trades, and if you've got some way of doing it, you're not going to be successful doing the short-term trading. Only 1 or 2 people can do that, which is why only 1% of people are successful, because there's a certain mindset that you have to have that goes with that. You can't just say, oh, that oak trades that way, so I'm going to trade that way as well. It is quite complicated. If you can be successful on the 15 minutes and it does work for you, that's fantastic, but do be careful. When you trade on those 15-minute charts, do be careful. Understand that overconfidence, what did I say? Overconfidence will put you back on your butt. Okay, so as you say, I am the whole day in my trade most of the time. So, your strategy is to sit and trade the whole day and keep yourself busy trading. And there's nothing wrong with that, because I've done that a lot in my life, where I just sit and trade and just watch the trades all day. And where that starts to become a problem is if it starts going pear-shaped and it starts going against you and you start having trades go against you. Those can be quite stressful days. Also, don't get yourself locked in. What you do is you find yourself locked in to the charts, locked into the trading. You can't do anything else. You can't leave the charts. You can't leave and do anything else if you're trading on those shorter time frames. And, we all need something else to do. Like I said, when I started this video, what did I say? Have you decided what you want from trading? Have you made up your mind what you actually want from trading? Is it money? Is it freedom? Is it because you love doing it? What is it you actually want to get out of trading? What is it that inspires you? And you can only ask that question for yourself at the end of the day. I know that, for example, over the years, I realized I'm kind of addicted to it. I just enjoy doing it. I don't need to trade because I've got my investments and that sort of thing going, but kind of addicted to trading. I kind of love doing it. So yeah, what is it that inspires you? What are you actually, have you decided what you want from trading? If it's only money, it could be tricky, especially if you're not enjoying it, or if it goes against you. But yeah, answer that question for yourself as well. You know, money is always a good thing to have. Money is nice to have, and it's not always exciting making the money. Sometimes the most boring way is the way you make the money. The fun part is maybe spending it. And now the big thing here is, like Shane just said, now money so I can buy the freedom. Be very, very, very careful of that, because there was a stage in my life where I opened a company. I was still trading, but I had a company as well. And it was like a prison sentence. I couldn't get away. I was locked in. I couldn't even watch my kids growing up. I was so busy running that company. And it takes away from your life. So when you say money buys you freedom, sometimes it buys you a prison sentence. I had all the money in the world, but nowhere to go with it. No, I was stuck. Even if you buy yourself a nice car, what can you do? Get in it, drive it to work, and park it. That's all you can do. It's a problem, which is why I actually sold that company. I let it go because I was like, I don't want this. This is not for me. I don't have a life, So you've got to weigh up a balance here. You've got to be very careful and weigh up a balance here. So if you're trading, for example, and you only trade 5-minute charts and you're trading the whole day, you might be buying yourself a prison sentence. You might be buying yourself into a trap where you are stuck only trading. Where's the freedom in sitting behind a desk all day, being stuck behind a computer? There's no real freedom in that. Think about that. Be very careful of what you wish for. So, and like I've said to you before, for the guys who've got a job, they're looking forward to that paycheck at the end of the month, and they're looking forward to that Friday afternoon, that weekend. When you work for yourself, you don't look forward to that weekend because you need to make money. You don't look forward to the end of the month because you're not receiving money. You're paying the bills. You're paying your staff. Kind of works the other way around. Anyway, I did say I was going to show you guys how to take a trade. Okay, so Carl says, hi Rob, so many people talking about silver that will go crazy long as an investment opportunity. What is your opinion about that? My opinion about that, Carl, is if they're talking about silver, then it's the same as gold. Gold and silver, put the two charts together, you will see that they do the same thing. I myself, at the moment, I'm long on gold. It's $13.68 down, I think. No, well, maybe worse. I don't know. But anyway, I'm long on gold, but only because it was technically telling me to go long, but at the moment it's forming a bit of a pin in here. It's going down a little bit. At the end of the day, if they're calling silver long, they're calling gold long. And then that can only be these people with little crystal balls that know something that we don't. Maybe they're looking into the crystal ball and there's some smoke coming out of it that says, buy silver, it's going to go insane. I don't know. Maybe they have a predictive capability, but let me tell you something now. There's no such thing as a hot tip in the market. The only thing a hot tip is going to do for you in the market is burn your fingers 9 times out of 10. Don't listen to hot tips in the market. Just the other day, last week, everyone was saying, it was 2 weeks ago, 2 weeks ago with the war, and I'll just go into Brent crude oil. When the oil price was at $77 up here, 78, everyone was saying oil's going to go to $150. And I said, no, it's not. It's going to correct. It's going to correct. And look what it did. It corrected. Now I'm buying it. Now I'm in because now I'm looking at, it's probably going to go back up from here because it had such a big fall. Everyone was assuming and calling and giving you the hot tip that it's going to go to $150. And guess what it did? Went all the way back down again. So hot tips are dangerous, and just trade what you see. If you're trading, trade what you see. If you're looking for something to invest in, then you might be looking for information like that. Where is it going to go? Is it going to go up? Is it going to go down? Well, somewhere down the line, it's probably going to go up, that sort of thing. But then you don't want to be doing that on leverage trading. That is, if you're leverage trading, you're trying to time the market. So if you're trying to time the market, you might be trading on 4 hours or 15 minutes or 5 minutes or day, and you're looking for that trade to play out. If you're trading on the 4 hour or the day, you're trying to get that trade to play out at least within the week or so. If you're trading on the 15 minute, you want it to play out in the same day. So the kind of calls that those guys are making are not going to play into your silver trade. It's not going to work. You're looking at it from a trader's point of view. It's short term. If you want to invest in it for the long term, then I would recommend find shares and invest in them, because shares always go up, indexes always go up in the long run over time, whereas commodities are cyclical. And cyclical means it goes up, it goes down, it goes up, it goes down. It's like a wave. It's like a sine wave. It goes up and down, up and down, up and down. Never just goes straight up. Very seldom. In fact, gold is the perfect example of that, gold and silver. But gold, it's sat at the same area for years, maybe 10, 12 years. It just sat at the same level, same similar level, didn't go anywhere. Whereas other things were going up. So that kind of, it went up, it went down, it went up, it went down. And now again, it's kind of stuck in a range at the moment. I doubt it's going to go anywhere fast. So yeah, very careful of commodities. When it comes to investing, a lot of friends of mine would always be like, I'm buying gold. And then I'll actually go and buy physical gold. You know how expensive it is to buy physical gold? You got any idea how much commissions and fees you have to pay if you buy physical gold? It's insane amounts of money. And then you got to bring it home and keep it somewhere and hope that no one breaks in and steals it. And then if you want to sell it again, you've got to pay those same commissions and fees. You get much less than what you see that it's valued at. So if you're going to buy gold, then rather buy it online, rather buy it and buy it on a chart or something like that. To buy physical gold is absolutely silly. But those guys who bought it aren't insanely wealthy from it. They haven't made loads of money from it. They bought a couple of $1,000 of gold back then, and now it's still worth a couple of $1,000. It's not worth much more, maybe 3,000 now. Whereas if you'd bought the S&P at that same time, for the same amount of money, you would have probably quadrupled your money by now. And not to mention, I hate to say it, but Bitcoin, I hate Bitcoin. I think it's based on fresh air, but the guys who bought it then made loads of money. So watch what you're investing in and watch for hot tips. Watch what people tell you. Ruman, buy Bitcoin. FX trader, what's your idea about specializing in trading just one product to get profitable at it first? My idea on that, I think most of the people here know my idea on that, and that is, don't pick one product. How many trades can you get out of one product? If you're trading on a 1 second chart or a 1 minute chart, then maybe you'll get some trades out of a product, and yeah, maybe you can trade that way. Maybe pick 3, do it that way. You're probably going to lose though, because 99% of traders lose on that kind of trading. But if you want to trade on the higher time frames, like you want a position trade like we do, or as you guys call it, swing trading, then there you can't just trade one product. Then you need to trade the whole market. You see, I don't, this is where you go wrong. And I say, separate the charts from the strategy, because I do not show anyone that you should only trade on charts. I never do that. I say to you guys, separate the charts from the strategy. I tell you guys, you must have a strategy and a business plan. If you have a strategy and a business plan, and you know where you're going, then you don't need the charts effectively, but the charts are there, you use them, it's an all likelihood trade, it's a high probability, it's good to have them to trade with. But the strategy is what's going to make you the money. And if you trade on a strategy and a business plan, then you can trade anything. You can trade orange peels, you can trade lemon peels, you can trade whatever you like on the market as long as you follow your strategy. All you're doing with the lines is picking a trade. And as I've said to you before, you don't need to trade on one product to learn that product, to see how that product. No. The actual charting is the easy part. Learning how to trade on a chart is insanely easy. This is the easy part. The difficult part is maintaining the trade. The difficult part is learning how to put your mind around it and strategize. Being disciplined with the stop loss. Sitting on your hands, being patient, getting rid of the fear of missing out. Not being overconfident, like I said earlier. So many things that you have to look at, that will make a difference to your trading. Let's have a look at how we take a trade. I'm just going to place that in there because I'm lazy. Now, you guys know that normally, under normal conditions, we would take this to the day chart and we'd take our levels off the day chart. And on the day chart, we would draw in some nice little rectangles like this one here. That will give us levels that we can trade from. I'm actually going to delete this one. I don't want it there. There's the dustbin. Okay. And that will give you your support and resistance levels. So let's do that. Let's draw that in on the oil. Because you know what? I'm going to put an oil trade in here. Now, I know that I drew this line in here, obviously to get an idea of where that level is, but the actual level is up there. And on the day, the actual level is further down as well, down here. Let's just see if we can find something like it. And this is why we draw the rectangles in. See the difference here, different levels. That makes it difficult to put a line in place and say, ooh, that's the level. No. So what I'm going to do, I'm going to draw the little goodies in place here. So let's just do that. Let's do that so you guys can see what's going on. So you've got a support level down here on the day chart. And we've got a resistance level. It's quite high up. Now we can draw that in. That's it. That's your levels. That's your resistance. That's your support. That's your main resistance and that's your main support. But then I'm going to go back down to the 4-hour and relook this whole picture. I'm going to put it on the candles. And the only reason I trade on the candles is so that I can pick my trades, so that I can determine that it's bearish or bullish, or that there's a green candle coming out of the area, or there's a red candle coming out of the area. Now, that's a level that I found on the day, which is a little bit away from here. So what I'm going to do on the 4-hour, I'm just going to pick that up and say that is actually a level. That's a 4-hour level. And then on the 4-hour, I'm just going to bring this in and say, well, that is actually a 4-hour level. So now I've got a nice picture. Because my picture's telling me that on the day I've got that resistance and that support, which means it's in that area between 80 and 60. That's where oil runs. Doesn't mean you're going to get a trade every day from it, but that's where it's running. Now, what I could do is I could say it's maybe running and it's going to go down, but no, I'm actually looking at it's broken a level here on the 4-hour as well. Just down here, it's breaking through this level here as well as the fact that this has now changed. So I'm just going to take that. And it is actually broken through that side as well. So it's just milling along sideways. And I believe that it's breaking through this resistance level here, and you're probably going to get a long trade on it. But now, how do you take this trade? I mean, how do you take this trade long? It's a terrible trade to take, but I'm going to take it anyway, just to show you guys how to buy it. And let's just show you guys how to buy this. So now you have this chart. It's 50-50. And this just proves to you that trading is 50-50. So, you know, which way do you want to trade on this? You can go short or you can go long. But I'll pick a long trade on this because the price is at the lower side of where I expect it to be, as well as the fact that it looks like it wants to climb up a little bit. And effectively, I'm going to take a chance on it and just give it a buy. So all you do is you just go into the buy area and you say, okay, I've decided that this is going to go up because I just feel like it's going to go up. And it makes sense to me. So now all I've done is I've drawn a line in the sand, I've drawn a line in the sand, I've drawn a couple of lines in the sand here that say to me, I can measure my strategy now. Now I can just put my strategy in place. It doesn't matter which way it goes. I'll put my strategy in place. So I want my stop loss. Actually, I'm going to put my stop loss on this particular trade. Where should I put the stop loss? A little bit further down. 63.50. I could put it below the daily resistance as well, and then go for the top. But I'm going to go for the in-between. I'm going to go for these two. I'm going to go for the 4-hour levels, and then keep an eye on the outer levels. But, you know, yeah, I think 63.50 is kind of fair. If it breaks that, it's probably breaking to the downside. Probably go all the way down to 60. So, yeah, let's take 63.50. 63.50. And a take profit at 77, just below the 77.46. I'm going to say if we take a profit at 77, then I'm going to say we don't want to lose 485. We want to lose 1% of the account. We only want to lose 1% of the account. So now we already know where we want our stop loss. We want our stop loss down here at the 63.50. So we know the stop loss is in place. We just don't want to lose $483. So then all we do is we reduce the number of lots. Why? Oh, okay, so that changed. You know, 63.50. Now, that gives me a $214 loss. I can actually make it 0.5, 267.50. It's closer to the 250. That'll be fine. And that's about as close as you're going to get it. And then you got a $407 profit on that. And all you do is click buy. And then you buy the trade and you own it. Happy days. Now you own this trade. And you close that. And that's as simple as taking a trade. That's how easy it is to actually take a trade and work it out. It's not complicated. Now all you do, now most of you will sit here and watch this and stress and worry about it and think, ooh, it's going into a loss or it's going into a win or whatever the case. Now what I do is I walk away and I leave it. Walk away and I leave it. I'll manage the trade when it goes into profit. So for example, if this now comes up here, if that goes up there to about 73.50, it goes into a profit, I'll take the stop loss, I'll move it up to cost because you don't want to lose that money. There's no point in losing that money, and then I'll manage the trade from there. If it goes right up to here, to where it's take profit, then I'll take the stop loss and I'll move it right up behind it. If it comes back and takes it out, I'll be happy with taking my money. And if it doesn't take it out, it'll just keep on going and you'll make more money. I'll move my take profit away. Easy as that. That's how you take a trade. And now I've got too many trades on this account. Wonderful stuff. Okay. That's as easy as it gets. Now all I need is for this United States dollar to work for me. Now, can you lose 10 trades in a row? Yep, you sure can. You sure can. Of course you can. You can lose 10 trades in a row. Will you? Most likely not. The high probability is you won't. But you can, and it can happen. So do keep that in mind when you're trading. And of course, Bruman reckons Fartcoin's the next Bitcoin. Well, I asked, when trading with leverage, what's the max factor you will trade on? I've been on products of 1 to 50. That's kind of crazy to me to trade with those movements. You got to pick a broker that's fair to you. 1 to 10, 1 to 50, 1 to 500. There's so many different factors to look at when you do that. But most of those guys that offer you that kind of leverage, as long as you can break it up like I broke it up there into 0 point something lots, and you can just manage your risk, it should be okay. You should be able to manage it. You should be okay with it. So, yeah, it just depends how you want to do it. I find most of the cash accounts I know in the US with the futures and that sort of thing, they're very strict on the amount of leverage you can have. So a lot of them keep the leverage down. But you have to take into account cost of trading and all that sort of stuff. So yeah, my opinion on it is trade what you feel comfortable with. If the risk amount is always an issue, the amount of risk is always an issue. How much can I risk on a trade? How much should I risk on a trade? As much as you're comfortable with, as much as you can go to sleep with, because you're going to want to go to sleep at night knowing that those trades are alive. And if you lose all those trades, will it bankrupt you? Will it kill you? Will it destroy you? Because if it will, then you're trading too much. Can you get up off your chair with all these trades in place and walk away and go and do something else? Can you actually get up and go and do something? Can you get up and go to the shops, or can you get up and go to the beach and relax? When you're sitting there, are you relaxed, or are you constantly checking on your phone as to what's happening with your trades? Is that what you're doing? Because if that's what you're doing, then you've got to look at how much you've traded. Are you over traded? Now, you keep in mind that while you're trading 1% per trade, on this particular account, I would have traded 250, 250, 250, 250 on average. I mean, it's a little bit more there, a little bit less there, but less there, less there. But okay, let's say an average of 250. So that would be, you've risked $1,000 on this account. On this account alone, you've risked $1,000. Are you able to sleep with that? Are you able to relax with that? You must remember, it's not just the trade that you're trading. That trade that you're trading, you're saying, oh, I'm only risking $250. It's not much. But when you take 10 trades, you're risking $2,500. Are you able to sleep with that? You got to work out how many trades you might take to go with that risk. Now, I don't just have this, for example, account or whatever. I've got quite a few accounts. And then the cash accounts are risking $1,000 per trade. So now imagine, you take 10 trades, you're risking $10,000. There are traders out there that risk $10,000 per trade, or $5,000 per trade, that sort of thing. So, and it depends how much on that risk. Are you risking it on a 4-hour chart for a couple of 100 points, or are you risking it on a 5-minute chart for 10 points? Now imagine, now you're risking $10,000 on 5 points. That's $2,000 per point. Can you handle that? Or you can risk $10,000, but it could be on 200 points, and that changes everything because you're on a 4-hour chart. It's entirely up to you how much you can afford to risk, and obviously on the idea of leverage. How much leverage can you handle? It took a lot for old traders like me to get used to leverage, because when we first traded, like I said, there was no computers, and we effectively traded on 1-to-1. So if we took a trade, it was $1 for one share, or whatever the case, and that's how we traded. And then leverage came along, and we had to change our whole structure, because we used to risk 10% on every single trade. And now suddenly you're not risking 10%. Suddenly you're risking a lot less. Suddenly you're risking 1%, because it's a totally different ballgame. If you risk 10% on one trade, suddenly it wipes out your account, especially if you're on 1 to 500 or 500 to 1. Yeah, you know what I'm saying. How's it, Luigi? So let's go and see what's in the news today. What's in the news today? Let's go and have a look at the news. It was interesting. So US stock futures rise as Trump tariff threatens to ramp up and pre-deadline. So like I said to you guys earlier, yeah, the news, you've got to keep your ear to the ground and you've got to keep one eye on it. Now, I'm not talking about CPI and jobs figures and that. Throw that in the bin. Don't forget about that stuff. It's rubbish. That's just economists making up stories, and then the markets jump up and down and they come back to where they were. But important stuff like these tariffs, they're going to make all the difference to you. You know, like things that are going on overseas and geopolitics, things like that. Those are things you need to keep your ear to the ground and you need to listen out for that stuff, because that stuff's going to make a difference to you. That stuff's going to make all the difference to you at the end of the day. Australia's central bank keeps rates steady at 3.85%, stuns markets. Big headline, meaningless stuff. It'll all settle down. Goldman Sachs lifts S&P 500 forecast on Fed outlook large cap stocks. So there's your hot tip. Goldman Sachs has forecast that the S&P 500 will do well. And you'll remember I also forecast that the S&P 500 will do well. Hot tip. Now you take that hot tip and burn your fingers, because I don't know, I don't have a predictive capability. Neither does Goldman Sachs, because we don't know what's going to happen in the world. So that prediction, or that idea that they have and I have, is based on normality, is based on if everything goes as per normal and nothing happens, then I expect the S&P will probably finish on 6,600, if not 7,000. But if tariffs go completely insane, or Donald Trump says the wrong thing, or if geopolitics go completely crazy, that could all change. That could cause a crash. That could cause things to go completely wrong. You know, just now he's saying that anyone who's tied to BRICS is going to get tariffed more, so at least 10% more as we stand at the moment. But he wants to tariff the countries that are tied to BRICS 100%. In other words, that's going to affect the world economically, one way or the other. And he basically wants to sanction South Africa. At the end of the day, it's going to affect things in a bigger way than we think. So do be careful of these kinds of predictions. Like I say, the S&P 500 is going to do well, but I say it if all things remain as they should. When things don't remain as they should, that's when things change. Those are the news events that you're looking for. And the news event that I figured this week is the 9th of July is tomorrow. And tomorrow the tariffs expire, the free rein that he gave everyone and negotiated deals and what have you. And at the moment, everyone seems to be thinking, well, it didn't happen last time, so it probably won't happen this time. Yep, where have I heard that before? Okay, so do be careful of what's going to happen. Trump promises more weapons for Ukraine and criticizes Putin. Well, that's never good news. Meta reportedly recruits Apple's head of AI. Okay, that's wonderful. Analyst China oil studies as traders take stock of US tariffs and OPEC shift. You see, that could affect my Brent crude oil trade. Third of chip production could face copper. So, we're going through this, and effectively, the tariffs are going to cause the biggest issue in the markets as far as I can see. I don't see anything else happening, but there are little hints here. Trump getting upset with Putin the other day. He got upset with his best mate, Elon Musk. I mean, he seems to be a little bit volatile in those areas, so you've got to keep your eyes on that scenario and that sort of situation as we go. Okay, so I'll put that one back. We can have a look at the other account. See what's going on here. So this one, I do have a Brent crude oil trade on the go. That's quite cool, quite cool, quite cool. I've only got the Brent crude oil trade on here. And I think Bruman said long on Bitcoin. You know what I'm looking at on Bitcoin is it's in a range at the moment. I mean, we're talking serious range here. Look at this. It's stuck between 100 and 110. And it doesn't seem to want to break through it right now. If it stays below this, if it carries on, it's going to break back down to 100 again. So I'm kind of in the camp of it could go a little bit up, but it's probably going to come down and test the 100 again before it goes up. Maybe even break through the 100 and go a little bit further down. I don't see Bitcoin actually going anywhere just at the moment. It seems to be a little bit caught up in itself. So we'll have to see how that's going to go. Not really 100% on that one. You see, this is the problem, Tywald. You see that I heard they've signed executive order to extend the tariffs deadline to August the 1st. And so they're going to keep kicking the can down the road. And then everybody gets excited because they kick the can down the road. But along the way, it's causing problems. It's causing hassle. Because it's going to get resolved. And it's going to get resolved suddenly. And then there's going to be an issue. So now we kick the can down the road for another few days. I don't know. You got to keep your eyes on that. And he's already throwing his toys out the cot with the BRICS countries. So what's going to happen with that? What's going to go down with that scenario? Is that going to remain as is? Because now we get upset with all the BRICS countries and we start attacking the BRICS countries and gosh, and then now we're going to supply Ukraine with weapons, and I'm annoyed with Putin, and these are all things that are problematic. So, like I say, I predicted the S&P should go to 6,600, but I'm cautious in the scenario with the whole things that are going on in the world, because that's in all normality. If everything stays as it should, and if the world carries on as it should, and every week we get our CPI, and every week we get our jobs figures, and every week the economy carries on, and every week things go as normal, the S&P will continue to go up. But that's not going to happen, is it? We all know it's not going to happen. We know that there's going to be tariffs, and there's going to be wars, and there's going to be hassles on the sidelines that are going to affect these markets. The way things are in the world at the moment, things are not hunky-dory. That said, it's amazing how, with all that in play, with all these hassles in the world in play, the S&P has managed to jump up to 6,200, or actually 6,280. That is an all-time high, and how it did that, I just don't know. But it did, and even though I knew that it would, it kind of skipped me because of all the stuff that's been going on the sidelines, and that's what always happens to traders. You know it's going to happen, but you end up missing out because you're sitting with all the rubbish in between that's causing you to stress out. And the one time that you don't stress out about it, the one time you try and ignore it all and you leave your trade in, even though there's a whole bunch of things going on in the world, you leave your trade, that's the one time it is going to work out that way, and it's going to take all your dosh. So it's a very difficult game to call. Shane, Rob, your thoughts on the DAX 4 hour, a New Zealand dollar, Japanese yen? I'll have a look. Stardust sounds good, Bruman. I like the idea of Stardust. Let's buy Stardust. DAX. Well, putting it on the DAX was long. But as with the DAX, I'm cautious. Because the problem you've got with the DAX is it will follow the rest of the world. So if the American market goes down, the DAX will go down as well. Now, while I did have this line here to show you the top, because that is pretty much a resistance, you do have this lovely DAX trend running up nicely here. And it is above the support. So it's going quite well. It actually, earlier on, it actually broke through it a little bit, but I've kind of adjusted these trend lines to suit. Now, the DAX is going up in this trend beautifully. It's going long. I mean, if it breaks through this 24,183, it's probably going to go all the way to the top here. It's running nicely. I got no problems with the longs on the DAX at all. It looks like a fantastic long trade, but just be careful of this very strong resistance level that it's developed in the 4-hour chart in the middle of this trend. So let it just break through that level. If it breaks to the upside and goes through that level, we've probably got a nice long trade going all the way to the top, but it might just come back down. But if it comes back down, it's not coming back down far. It's coming back to take the money off this support and back up again. It just needs to break through that level and give you a nice long trade up. And then it's going to go all the way to these highs, probably above the 24.5, and give you quite a good long trade. If it goes short, it'll be pretty much because it's following the rest of the world or because something has caused it to actually go down. Good morning, Elaine. How's it going? I must actually think about buying Stardust. Stardust sounds good. I think we'll buy some Stardust. So today we have actually gone through how to take a trade. So I hope you guys were here when I did that. But if you weren't, go back in the video and watch it, because I've gone over that whole procedure on how to take a trade. And I took that trade on this platform and we took it on Brent crude oil, right? So this particular trade here. And we have to actually hope that it's going to rather go up than down, but okay. At the moment it seems to be going down. And we've got a whole bunch of trades open on this particular platform. Why am I looking at this platform? Just something different, guys. You want to look at the other one, we can look at the other one, it's fine. And there's even another one for you to look at as well, but too many. I'm just showing you guys how to trade. So your lesson today was how to take a trade. So if you did miss it, please go back and have a look at it and see if it can help you if you're not sure how to take the trades, when to take the trades, or why we take the trades. Remember, the trades are 50-50. The charts do not have any predictive capability. So for example, this chart here has got no predictive capability whatsoever. What are we looking at if we look at the DAX chart here? What are we actually looking at? What we've done as human beings is we've drawn a couple of lines in place because we've learned that human beings are creatures of habit. What happened in the past probably happened in the future. And also, you're trading with the money because there's a flow. It's like you can trade against the waves or you can trade with the waves. And as more than 95% traders or trading is done by the pros and the money, you're just following that money flow. So you know that they can see that trend as well. And you know that they're going to bounce the money off that trend. That's what you know, or that's what you believe. So all you're trying to do is grab that money and bounce with them, take that money. You know that they can see that resistance level, that double top. They can see it. But if it breaks through there, they'll also see it and they'll buy, and then the money will go up and you can just jump in and go with them. That's what you're looking for. You're looking for liquidity in the market. This is where people make their mistake with indicators and different trading systems and the belief that a win rate's going to make them money. If you go and you see some of these older pros trading and whatnot, they got nothing on their charts, and they're either just using maybe a volume profile or a relative strength index or something like that. That's it. They don't sit and wait for this to cross or that to cross or the moon to be made of green cheese or something to happen. They simply take the trades based on the liquidity, what they see. It's overbought, oversold. They're so simple in it. And if you can follow what their simplicity is, then you can find the money with them. That's what you're doing. You're looking for what they're doing. And if you find their simplicity, you will find their money and you can go with it, and you can take the little pickings off the top, because that's all it is to them. We are nothing in the greater scheme of things. But if we can take the pickings off of it, that's what we're about. We're taking the pickings off of the top. They're the big money. They're moving the markets, not us. So when you're looking at charts, try to remember that the charts don't have a predictive capability. They can't tell you where the market's going next. That's not what the charts are for. The charts are for you to draw a line in the sand, take a trade. That's all they're there to do. The market's 50-50. It either goes up or it goes down. That's it. All you want to do is try and choose the right direction so that you can make a little bit of a profit along the way. It's crazy how people think that somehow or another that a win rate or the charts are going to somehow make the money, that they're somehow going to beat the pros in the market. You can't time the market. You can only try and negotiate it in your favor and see how it works out. That's why it's a numbers game at the end of the day as well. And the more trades you can take, the more you can get the numbers in your favor. Somewhere down the line, you'll win. It's always the case. But you've got to be able to take the losses to get to that win. If you only trade one product, that's going to be difficult. It's going to be more difficult. Sure it is. Hey, Mohammed, Malaysia, it's 6 p.m. here. Yeah, that's it's midday here. Midday. And that's why I try and make this Tuesday show at 11, and then I make the Thursday show at 2, so that I can try and give everybody a chance to get in on this live show and to come and learn something. If you weren't here earlier, I've already done the lesson part where I've shown everybody how we take a trade and why we take a trade, that sort of thing. And at the moment, I'm just looking at basic concepts. You know, one of the biggest problems in the market is having too many indicators on your chart or having too many lines on your chart. And I've seen it over and over again. So many people have a million lines on their chart here, and they have millions of indicators and things going on. Maybe because you don't want to miss out on something. I don't know. But all it does is it fools you into a false sense of what you think is going on. You know, one thing, you look at it and you think, oh, I want to take a long trade here. Oh, hang on, I put a line in there that says you can't take that long trade there. You've got to go short. You know, it confuses you. It confuses you. So keep it as simple as you possibly can. Don't overcomplicate your trading. And also don't put too much on your charts, because you can't see what's going on your charts. It buries it. You can't actually compute what's actually happening. You start drawing too many things in, it drives you crazy. So I try and keep it to the little rectangular blocks. As you know, we did it here with Brent crude. You know, I drew the daily resistance, the daily support. That's fine. And then inside that, I'll try and just use the lines, just to either the trend lines or the horizontal lines, just to give me a picture of where the 4 hour is going and trade within that, in that area. And then you can pick out supply and demand. You can pick out, you know, gaps, things like that if you want to, but try and stay away from that if you can. Try and keep it to support and resistance and trend. Trend is great because, you know, the trend is your friend, so you can trade with the trend. So trends are great. I like trends. Like, for example, here on the DAX, you know, we're trading with the trend, so that's great. And then we know that if it breaks that trend, like if it turns around, comes down, breaks through there, then we know we're breaking a trend and we counter trade. That's great. But range is also good. Like here, it's trading within that range. So you can trade within that range. What else is trading within a range? Bitcoin is trading within a range. So Bitcoin is trading between 100 and 110. It's in that range. So every time it goes up, you can sell. Every time it goes down, you can buy, so on. And those ranges can also give you a lot of information, information in the market. Just for Brooman here, just keep an eye on this. I forgot I actually drew that line in the other day, where it actually, in that range, broke through that trend to the downside. And it looks like it might go back down to the 100. There is another lower level down here at 98 that you can watch as well. So you can keep it simple. You don't have to get overcomplicated with it and do all this fancy stuff. It's not necessary unless you actually trying to catch the markets at the open on the 5-minute charts or something like that, and then you might have some system that says to you, every time the market opens, then the price does this, it moves to the left, and then it moves to the right, and then it goes down, and then, you know, if you've got some kind of system like that, you can apply it but and tweak it, but just have a plan that works around that system. Simon, true, when I start, I use many indicators. I use RSI, that's all. The Ruin, thanks. And then all I say is, like, for example, Simon says he only uses the RSI now, which is absolutely fantastic. And like I said, I've seen many a pro do that. Just use the RSI. It's good enough for him, the relative strength index. It's overbought, it's oversold, because you're in the right ballpark. But just remember, if you do that, if a product is shown as oversold, very often, what you get is it could sit oversold for a long period of time. So what I actually do with an RSI, maybe I can show you on this German index. Where are the indicators? Oh, there. Okay. Let's do RSI, relative strength index. Guys, I never use indicators, so it gets a bit complicated. But for example, if I see there, if I look at an RSI and I see, oh no, you know what, it's overbought, so we should be selling the DAX at that point. And what I would do, because it can sit overbought for a long extended period of time. In this case, it didn't, but very often it can. It can sit in an extended period. For example, here, oversold. It stayed oversold for a kind of extended period of time. So what I normally do is I take a trend line on the RSI itself, and then I would draw it through that level there. Now what I do is I'll wait for the RSI to break through the trend line, and then I'll take my trade there, and then it will go short with the hopes that it'll get all the way. And if it doesn't, then you're kind of looking to get out when it turns around and breaks back through the other side again. That's how I trade with the RSI. So in other words, what I would do now as well is I would say, okay, I've taken the trade to the short side, and then what I'll do is I'll draw the trend line that way around, and if the RSI breaks to the other side, then I'm getting out of my trade, or I'm buying it long. So it's a long trade now. And the same goes for when it's coming back. So at the moment, it's let's say it's a long trade at the moment, then I would wait to see, well, there isn't a very nice level here because it didn't go oversold, but if there was a level, I'd be waiting for it to break back through this particular trend. So if you want to trade with that kind of system, then I wouldn't just, oh, it's overbought, so I'm just going to sell it. You can, but you might sit over for an extended period of time in that situation where it runs like this and goes up further. So what I normally do is just put a trend line, and if it breaks that on the RSI, then you can actually trade it short. That's just another system, guys. It's another system. So I don't want to confuse you. I can make videos about these systems for you, but I don't want to, because I don't want to confuse the hell out of you. But there you go. That's another system that if you want to apply it, you could. You could apply that system. What I use those systems for is to understand what other people are doing, but also sometimes, for example, what I did with Brent crude oil on the other chart when it was running so flat, is I put a Fibonacci in because I was like, this thing's just not giving me an entry point. It's not giving me any idea what's going on. I put a fib in. There it was. It's in the golden zone. I was like, oh, you know what? I can actually take a trade on that based on the Fibonacci system rather than my normal price action system. And that's what made me take the Brent crude oil trade. Not today, days ago. Today, I'm looking at something completely different. So that's just for information, guys. You can use the RSI that way. I'm pretty sure that you guys too do know how to use the MACD and all that as well. But we can go into detail with that sort of stuff as well. So anyway, so that chap, Simon, you said you're using the RSI. Maybe you want to try that out. I don't know. But yeah, that does work as well. If it sort of, you can move your trend line every single time. Every time it breaks through that trend, you can get out of your trades that way as well. You know, if it turns against you and it breaks through that trend, maybe you want to get in when it's really overbought, and then you're just not sure when to get out. You can get out of your trades when it does that as well. It's a system. It works. And it's not as lagging as moving average crossovers and things like that. It's actually not too bad. But like I say, it can lag because you see overbought and you think, oh, I must get into that. And you can actually sit in a trade for a really long time on the wrong side of a trade. Dave, how's it, man? I only have 200 EMA. My candlestick is in white, like watching 1960 television. 1960 television, eh? Oh, Muhammad's giving his age away. The reason I put the green and the red on my candles, and I know a lot of traders take the green and the red off their candles. Many guys take the green and the red off the candles, and I know why. It's because you believe psychologically that affects you. But I have the reverse on that. I trade both ways. I trade long and I trade short. In other words, I buy and I sell. It doesn't matter to me. So whether the candle's red or green doesn't matter to me. Sometimes red can be really exciting for me. The more red, the better, because I'm short, and then it's making me money. So the only reason I keep it green and red is this: at a glance, poof, I can see it's a green candle, it's closed. At a glance, I can see it's a red candle, it's closed. I don't have to. I noticed that when I change the colors to clear or blue and black or white or whatever the case, that I tend to have a tendency to double think. In other words, I look at the candle, I think, is it short or long? It just takes me a second longer to identify the chart. Maybe it's because I don't trade in those colors. So I just find that the green and red, it's instant. It's like I see it. I don't even need to put lines in place. I can see exactly what's going on the chart. And then that's why I leave them red and green. So hopefully I don't traumatize anybody with that, but I do like my candles to be red and green. I just left this volume on here, guys. I didn't mean to put it on. It's just on these charts when I load them up. So I just can't be bothered taking it off, to be honest with you. But if I was going to use volume, this is how I would use it. I would have it in red and green as well, because I can see the bullish volume and the bearish volume. But I don't use it. I just left it there because it's there. I got your point, Rob. I did not ask the right question. I was really thinking of momentum trading, like scalping. Okay, we don't want to be scalping. I'm in Western Wisconsin, beautiful place. Okay. Scalping's a bad idea. You see, the problem with scalping, and I've done scalping, lots of scalping in the past. But what it does is it destroys your soul, because you work so hard scalping. You work so hard, you scalp, you scalp, you scalp. And the trouble with scalping is you take like $10 off every trade. You win 8 trades in a row. You've made that $80, a lot of hard work. And then the 9th trade, you lose $1,000 and you can't even make that back. Scalping, it's soul destroying. You wiped out all that work you did and you lost some in 1 second, because that can happen really quickly. So I don't like scalping. I think it doesn't work for anyone. Now, don't get me wrong. Don't compare scalping to what I'm talking about. If you want to scalp somehow with a strategy, that's different, but that is not scalping, because now if you have a strategy, you still have to make a target profit and you still have to make a target loss if you have a strategy. You have to have risk management. Now, scalping doesn't have risk management, actual scalping. So don't confuse scalping with having a plan. Scalping doesn't have a plan. It doesn't have a risk management plan. Scalping is just, I'm going to take this trade and I'm going to quickly take a profit when it comes into play. That's scalping. But when you take a loss, what do you do? Every scalper, what they do is when they're scalping and they go into a loss, they hold the loss. Why do they hold the loss? Because they only want to make a win. Because you want to make a win on every single trade if you're a scalper. You can't lose. And so what happens is you end up holding the loss. And when you hold the loss, it wipes out all the wins that you made in the past. You see, a strategy doesn't work with a scalp because strategy means you have to make more on your wins and lose less on your losses. And that means you have to have a target profit. And scalping doesn't have a target profit. Scalping is, I quickly make a profit. I feel like I've made my profit. I've got enough profit. I get out. That's scalping. Totally different to a proper strategy. And also scalping relies solely on the lines, and the lines don't make you money. The lines cannot predict which way the market's going to go. The lines cannot predict a profit. So scalping relies solely on the lines, and this is one of the cases where you would have a winning run and you'd become overconfident because you're winning. Now, if you keep winning small amounts, you start to believe that you're winning. You start to believe that you're doing well. And then that one comes along that takes you to the cleaners, and yeah, it destroys your soul. It destroys you completely. So be careful of that. Hey, thanks, Chuck. That's really, thank you. So like I say it's soul destroying to scalp and then end up losing like that. It's not the right thing to do. But don't get me wrong. If you're scalping and you have a strategy, that's not scalping. Okay, that's something completely different. So we tend to have terminologies. A lot of the guys go on courses and then they learn something. They learn something on the course. And what actually happens is on that course, they're taught that the lines will make them money, and they come back feeling that scalping will somehow make them money, and it really doesn't. So yeah, and then they come back with terminology. And the terminology is the big problem, because you go and you learn all about the stock market. You go and learn all about the abbreviations in the market. You go and learn all about the little words and the little goodies and what a market means if it's going this way or that way. And you come back, you know far more about the stock market than I'll ever know. I mean, you know who invented the stock market, because that's what they teach you on the course. The one thing they don't teach you on those courses, is how to make money. They teach you how to chart. They teach you how to work with a chart 9 times out of 10. I don't think I've seen one course that teaches you how to make money. That teaches you how to have a business plan or a proper strategy. The only person I've ever seen teach that, and it was free, was Tom, as Shane puts it. Tom teaches. I've seen him actually teach people the psychology of trading, and that it's not the lines that make them the money, and to make more on the wins and lose less on their losses. That's the only person I've ever seen teach that, and he doesn't charge for that. So at the end of the day, that's the problem. There's too many people teaching you terminology, teaching you charting, teaching you the markets going up and down and all this rubbish, and not teaching you the proper way to make money. So you see here on the DAX, we're waiting for that to break through that actual resistance. We're waiting for that breakthrough so that we can take that long, and it looks like it might actually do that. It looks like it wants to do that. If they've kicked the can down the road with the tariffs, then there's a good chance that will go long. So Mohammed says, good news since followed and watched Rob this past few weeks, almost break even. Mohammed, well done. Bully for you, man. That's great. That's always good. Dave Hoko, nope, this is the cheese dairy state here. Western Wisconsin. So Western Wisconsin cheese dairy state. What's like make a lot of cheese? Sounds good to me. Yeah, Wallace and Gromit stuff there. I'm trading every few days instead of every few hours. You know, like I say, it's a choice we make, Mohammed. You know, do we trade every few days or do we trade every few hours? And yeah, as long as there's a strategy. No, there's no ads in the chat. Only for you, Shane. But as far as I know, no. It's boring at first, but boring work, I guess. Mohammed, you see, that's what I say. The making money part is the boring part. The fun part is spending it. Making the money, if it's not boring, if it's like really like keeping your blood pressure up, then you're probably doing it wrong. Once it becomes boring and like monotonous, then you're doing it right, and then you're making the money. So yeah, it's boring, and that's why I have these YouTube videos, because it's boring. To sit trading on 4-hour charts is insanely drive you insane, you know. So yeah, you got to have something to keep you busy. All through my trading career, I've done things. I've had like businesses and stuff going on to keep me busy. And it's only recently that I didn't have something going on. So I was like, well, got to do something. And then I decided to do these videos, and that's a bit of fun. That's really fun. So I see the DAX does want to break through that level. Okay, so Simon's asking me how we calculate position size. So if you go back in the video where I showed you how to take a trade, where we did it on Brent, that's how we calculate position size. But I'm going to show you again right now. Is that DX Trade or Match Trader? This is not Match Trader, no. This is Trading View on here, which is connected to whatever. This is also a funded account, by the way. This is not my cash account. I don't put my cash accounts up here in case my account number gets out there. It's like showing your bank account to someone, so I'm very careful with that. But I put these funded accounts out there. If that gets done, then who cares? Okay. So Lunchalot, is this Top Fans XP thing new? Yes, it is. It is. It's something that YouTube brought out. It's not something I brought out. I wish I was that clever. I'm not. It's something that YouTube brought out, and I suppose it's a bit of fun, you know. Top chat. Guy who puts the most chats out gets number one, or whatever the case. I think I see it's Shane at the moment, and Sir Lunchalot, you're number 3. How's it, Dave? Good to see you. Shane. Okay, so I just want to see here. You asked how you calculate the position size. So I have gone over it in the video already, so I hope you guys don't mind. I'm just going to go over it in the video again. Let's say we wanted to buy this German DAX, and we decided, no, we're going to buy the German DAX now. All we do is we go here. Actually, maybe I should do it on the other account. No, it's okay. I'll do it here. German DAX. We want to buy the German DAX. How do we pick our size of trade? The first thing you do is you look at where you want your stop loss. So where would you want your stop loss on this German DAX, Simon? Probably at the 23.8. 23.8. Why do I choose the 23.8? Because the 23.8 is below that trend support, and it's below those lows. So I'm looking at 23.8. I should actually probably make it 23.775 just to make it below those lows over there. 23.775. Okay. So all you do is you say, that's where I want my stop loss. I want my stop loss at 23.775. Stop loss 23.775. 775. That's where I want my stop loss. Now, I need to work out a 1% loss on this account. This account's a $25,000 account, so I want to have a 1% stop loss around about $250. It's in lots, okay? So at the moment, it's, you see here, US dollar $45. So all I do, I say, well, it's probably 0.4. No, maybe 0.5. 0.5 lots, $230. Close enough, close enough. Now, bear in mind, if you've got a cash account with MetaTrader 5 like I have, you can't do this. You need to download something off MQL5, okay? But on most other trading platforms, you can do this. Particularly, this is TradingView. You can do it on here. So now I've worked out that I'm going to take a $230 loss, right? Take profit. Where do I want my take profit? I want my take profit at 24,600. Now, here's the thing. You want to make sure that your take profit's worthwhile. And on this trade, it's a one-to-one. I don't like a one-to-one. I prefer a bit more than a one-to-one. So I'm not going to place this trade right now. But that's how you choose your trade. Okay, and then you would just click buy. So you just take, I want my stop loss there. That's the amount of lots that I'm going to need to take to have that kind of risk. And then I'll work out, where do I want my take profit? Is it worth my while taking the trade? And then buy the trade based on that. I hope that makes sense to you, Simon. That's how you take the trade. Okay. I just used that chart as an example. We could have done it on the other chart as well. Same thing. But as I say, I noticed on well, many years ago, MT5 has really gone behind a little bit. Doesn't have that capability. When you take a trade on MT5, you kind of need to know what size your trades are. But there are products that you can download off MQL5 because they got this, like all these extra downloads. And they'll help you calculate your trade if you want to do it that way. Otherwise, you just got to work out another way to do it. I just like these little other programs do give you the option to choose it that way, and it makes it so much easier to manage your risk with these products. I do prefer, the newer trading platforms that are available out there, because even the C Trader that we use has got that as well, and it's quite decent. I think even your Match Trader can do it as well. If you are on a Match Trader on a funded account. So yeah, it's all there. By the way, guys, these funded accounts that I use, they allow me to trade through the news. They allow you to trade over the weekends. They allow you to do all kinds of different things. They just let you trade like you're normally trading your normal cash account, which is why I use them. I've left links to them in the descriptions below if you want to trade with them. I just use them for these shows. But yeah, and then like the cash account, I use MT5. That is a bit more complicated for most people. It's quite an old program, but I'm used to it. It still does the job. And the cash accounts are much more solid than these funded accounts when it comes to trading. Okay. You guys are funny. Okay, so Bruman found his way to number 1. And then Sir Lancelot number 2, Shane number 3. Shane, you dropped to number 3 like that, dude. It's like Formula 1. Oh, God. Yeah. Dave, everyone have a good time. Got to get ready for work. Got a 40-minute commute ahead of you. Wow. I actually spent my life like that at one stage. I opened a business so far away from home that I was traveling this Musa distance to get there, and I thought, oh, that was so silly. That time. I never did it again. Every business I ever opened after that was right next to my house and really close to home and easy to trade as well, proper internet and everything. It was. Can you imagine? I've had these businesses, and I would always have my trading set up in the office, and employees would be like, "What the?" Yeah, but trading's easy. You don't need to sit and watch it all day and that sort of thing, and you really do need to keep yourself busy. So, yeah. So I kind of, when last did I? About 5 years ago, I had the property company. I let that go. And so I haven't had a business for about 5 years now. And so it got kind of boring just trading. That's why about 1.5 years ago, longer, I decided let's just make YouTube videos. And here we are. Yeah. So just remember, if you guys do decide that you only want to trade and nothing else, it's going to be pretty boring, and you're probably going to want to do other things as well. So otherwise, have a hobby or something, because you can't just trade. I have got a couple of friends that will just trade, will just look at charts all day, but I can't do that. I love it, but it's crazy. Absolutely crazy. And today's day and age, it's actually very easy to have other things to do. In the old days, it was more difficult. I remember when I first started trading, and then I opened a shop, and I didn't have computers at that time, and I was dying to get those very fancy tills in my retail store and everything, and I was trying to trade at the same time, and I'd sit in the desk with my newspaper in the morning, trying to go through the shares while the business was running and opening, and I tell you what, the things I did, crazy stuff, crazy stuff. But at the end of the day, make sure you've got investments. Make sure you've got loads of investments on the side. That's going to hold you in good stead when you get older and you grow older, because those investments will always make you the money. They'll always make you the profit. That's what they're good at. If I was given the formula for position size, there is a formula that I used to use, but yeah, that's always complicated, eh? You have your stop loss price, take the difference between your current price and your stop price, you have 1% of your account per trade, divide 1% per trade, different stock size. I did actually have a formula. I was actually give it to you guys if you need it. I can't remember what I used, but there is a little formula that you can use. But the difficult part, well, is not so much the position size. It's the different accounts have different things. For example, this one uses lots. The next one will use pips. Another one will use points and CFD. Some futures will use different amounts. And it depends on your leverage. You just got to understand your account and which account you're dealing with. So, for example, now I'm dealing with a couple of different accounts here, with probably different leverages on them and that sort of thing. And then it becomes, you can't use the same formula. I can't come to this chart and work out my stop loss and then go to my MT5 account and put it on there the same. I use contracts there. It's a different size. You just got to work out on your different platforms what the sizes are. I had a formula on my MT5 account which I used there, but I actually got lazy and started downloading stuff off the MQL5 to work it out for me. It's quicker and it's easier. But what I find there is I know how much I got, I know how much I want to trade, and I know how much contracts I want to trade on each individual instrument, and it's all there for me. So basically, you know, I've got a spreadsheet there that tells me how many contracts I traded last time, and I trade the same amount of contracts. I don't even look. That's easier for me on those particular accounts. But on these accounts, they're all different. So yeah, but it's an easy way to work it out. Work out your stop loss first, and then work out the trade. That's how you do it. Always work the trade first, and always work out where you want your stop loss first, and then work out what size your trade is going to be back to that. So German DAX, yeah. Why am I sitting on the German DAX when there's so many other things we should be sitting on? Yeah. I'm actually really still surprised at the South African rand that it hasn't found its way into the oblivion yet, that it hasn't gone anywhere yet. You know, as far as I'm concerned, the South African Rand should be really weak, and I think it will continue on to go, and we probably will make that 433 US dollars or more. But as we stand at the moment, it's still sitting there. Bit of a surprise. Gold, on the other hand, I did take a long trade on this, and as someone said earlier, that silver was expected to go up. The trouble with that is that gold, for example, same as silver, everyone's making their assumptions on it and their calls. A hot tip will burn your fingers. You'll notice that on this particular trade, I committed the Cardinalson, and I went on a 1-to-1 ratio. You can do that if you want to, guys. You can take a 1-to-1 ratio, and the reason I say you can do that is because if you take this trade and it goes against you, you're risking $200 here. If it goes for you, you're going to make $200 here. You're still going to make money. And at the end of the day, the way I look at it is if it does get up to here, I'm not going to take the profit. What I'm going to do is move my stop loss right up behind it, and I'm going to move the profit out and see if it can follow it through. Not necessarily just going to take the profit. So at the end of the day, you know, if you need to, you can take a 1-to-1 trade if necessary. I could have done that on the DAX now as well. I just decided not to because I got a lot of trades on this account. I'll maybe go have a look at the other account. This Euro Great British Pound has gone against me now. It was in my favor, and now it's starting to turn against me, but it'll probably still go in my favor in the long run. It'll probably still turn around and go for us. And then Brent crude oil we took just now, that one does seem to be now starting to come back to life. Hopefully it will. Oh, New Zealand dollar, Japanese yen. Let's go and have a look at the New Zealand dollar, Japanese yen. And you want to go short. An interesting call, and you probably want to go short because of this top here, right? Let's just get a little bit of a picture on this particular product and see what we've got, and we'll take it from there, shall we? Let's just have a look at what we've got on the New Zealand dollar, Japanese yen before we do anything and before we get excited. The first thing I would do is maybe just draw in a level and just see what we got here. And on the daily, that's our daily level. That's our resistance. Just to give us a picture, just to give us a little bit of a picture of where we are. That would be the resistance. There's not much of a support level down here. Now what I'm going to do is going to put a trend line on the daily through here. There's only 2 touch points and there needs to be 3. Makes it interesting, doesn't it? Okay. That means it's breaking to the downside. Tell you what, I'm going to leave that out because it's breaking to the downside. No, I'm going to take it back to the 4-hour. Let's put it back on the candles. Let's put it back on the 4-hour. Let's just see what that looks like on the 4-hour. And then I'm just going to take a horizontal because there is a top here. There's a level there. And it's also, it really is in a range on the 4-hour, isn't it? I'm just going to take a range on the 4-hour and just see there's 1, 2. There is more touches if you have the tails. Okay. So if you want to take a short on this, you've got to wait for that candle to close. That red candle there, it's got to close. It's still open because it might break to the upside. And it's in a bullish phase. It's actually in a bullish run. It's not in a bearish phase. So I would be cautious on a short here based on the fact that it isn't really short yet. So if you want to take a short on this level, what I might do is say, okay, if you want to take the short on this level, just wait for it to break through that trend line and then take the short. That will give you the short. Just for information. You can take it any way you like, but if I look at that, there is a top, there is a resistance, there is a possibility of it going short, but it's also in a bullish phase. So you're going against the trend. So in the very, 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 very short term, I would say, okay, if it breaks through that level, gives you a red candle down, then you might get a decent short trade down to the bottom. Nothing wrong. That's quite cool. Okay. That's just my 15 cents worth, eh? Or 15 cents worth. Just give it a chance. Yeah. All right. But that's how I set the charts up. Shane, I know you like the Fibonacci, and the Fibonacci works well. Nothing wrong with it. It's just another indicator at the end of the day. Okay. So, guys, I think that's been a good day. A good day's training. I would like you guys to join me again on Thursday at 1400 GMT +2, where we will continue, and I'll think of something else to show you guys and teach you guys and take you guys along the road of success. My goal, as I always tell you guys, is not to turn you into millionaires overnight. I'll turn you into a competent trader so you don't lose all your money, because that's the important part to understand in trading. Is most people get into trading with a view of, I'm going to make so much money, I'm going to turn this $100 into $1 million and blah, blah, blah. And they forget about the other side of things. You got to hold on to what you got. Because if you lose what you've got, you can't make that money. So you've got to build that up. And what I always say with the smaller amounts, for example, if you start with a small amount, you've got to have something else bringing you the income in. Because if you don't, you're probably going to lose that smaller amount. The idea of building an account with a smaller amount is you've got to have an income from somewhere, because what you're going to do is you're going to take that smaller amount and you're going to build it, build it, build it, build it. But to build it, you can't be withdrawing on it, because if you withdraw on it, it's not going to build. And you've got to do it slowly but surely. So if you've got $100, you can't risk $100 because you're going to lose it on the first trade. So you're going to have to risk a lot less in the beginning and build that account up to a point where it's got some decent value. That's just how I'm going to end the show today. I'm just going to tell you guys, watch the risk. Try and stay in the game. Don't get yourself taken out of the game really quickly and really easily. I want to thank you guys for watching. I'm glad you all joined me today. It's been absolutely fantastic having you. It's been fantastic being with you guys again. And it's been fun as always. Guys, as I always tell you guys, keep your feet on the ground. Reach for the sky. Thanks for watching. I'll see you guys soon. Keep well. Happy trading. Make lots of money. And cheers. Ciao. And bye.